What is going on, my sniper gang? It's KOJOFOREX, aka GBP Legend, aka Sniper Trader, aka King of Blues again. Today I'm here for another important episode of trading mistakes that I find a lot of beginners, not only beginners, but even experienced traders also doing. So I feel like trade management is the less talked about, right? I kind of even checked YouTube and then I realized that nobody's really even doing any video about trade management, right? Everybody thinks that the moment you place a trade, you're supposed to like just set your stop loss, take profit, sit down, relax, and then let it trade either hit your stop loss or hit your take profit, right? But it doesn't work that way, right? In real market scenario, the market has dynamic changes, right? Anything can happen at any time at all, right? That is why trade management is very important, because we understand that we are living in an environment that is literally uncontrolled in the sense that anything can happen at any particular damn time. The market can literally run up massively in our favor, or with no reason at all literally reverse back into the opposite direction, and then we can take like some massive loss or perhaps even make like some massive profit, right? But along this way, if you are a professional trader, or even if you've got like some reasonable training, you can be able to know that what with trade management, there are always ways to be able to like curtail unforeseen circumstances, or even perhaps take advantage of positions that are really going well in your favor. There are actually so many ways that you can go about trade management, and I'm going to share with you guys all the tips and tricks and ways that I personally use in managing my trades. So today is Tuesday as I'm recording this, and I've already taken 7 trades since the market opened. Yesterday, which was Monday, we had a trade on XAU USD, which is gold, and USD card, right? So I'm going to explain into details how this trade came about, the setups, what I was looking at, and then talking about the USD Swiss franc trade, my thinking process for that trade, how it materialized, and eventually what it is actually doing in the market currently, right? So I'm going to go step by step with you guys, thinking into trade management with this perspective, right? So at this point, I'm really trying to talk about how to not just place trade and then set your stop loss, take profit, and then leave the trade, but think as a trader to manage your trade to actually make the most out of the market if it's going in your favor, or to prevent any catastrophic damage that may come from these unforeseen circumstances that can literally hit us in the market, right? So yesterday we had a very nice trade on gold, right? Very brilliant trade setup on gold. I was looking at it around this area, right? I was actually looking at gold around this area early Monday morning, and I was looking out for a short position on gold, right, based on my own confluences, right? I was looking out for a short position on gold, and because of that, you know how I do it, I was looking into the cross-referencing, right, literally giving close call attention to the XY, right? So I was also watching the XY around this area, right, just the same area when I was looking for a position on gold. And at the same time, I told you guys, right, if I didn't, then maybe this is the first time you're hearing it, I shared that the XY has direct correlation with USD Swiss franc. So when I was looking at the XY, I was at the same time also looking at what USD Swiss franc for a trade position as well, right? So I was also looking at monitoring the XY and then USD Swiss franc at this same area right here, right? Now let's look at the interesting thing that happened specifically looking at gold. So after I had like all my trade confirmation, after I had everything literally aligned and giving me an indication that yeah, we're going to possibly go short on gold, right? I took the trade, right? So I literally jumped in on gold around here, right? And then I put my stop loss just above like this candle. So we had the trade looking something like this, right? Prior to like all this formation right here, we had the trade looking something like this, right? A very nice trade setup, and I was actually expecting gold to maybe make like, you know, some pullback into these areas, or possibly even like drop all the way back into this low. So those were the take profit areas I was targeting, right? But now let's draw even this trade setup into the 1 hour time frame, and then let's see something interesting that went on with this market, right? And then what could have happened if you're not really paying close attention to trade management. So as we took this trade, right, the gold didn't just dip straight into profit, right? We had a lot of consolidation, right, as I'll show you guys, right? So you see it pushes in profit, it goes back in loss, it pushed back in profit, you know, just, and then we had like this big dip, right? This big dip in profit. Now with this big dip in profit, you may wonder what amount of pips is this, right? So we can use what, the pip calculator to measure this. This is literally 100 pips in profit, right? And you guys know how gold is extremely volatile. Even putting on a 0.1 lot for 100 pips of gold in profit, then you know the kind of money you're literally making, right? 100 pips, 0.1 lot in gold, you know the kind of money you are already making. So yeah, with 1 hour candle, just 1 hour candle, gold literally dipped 100 pips in our favor. Now this is where the real catch is. This is where the real catch is, and this is where I find a lot of traders actually making a lot of mistakes, right? So yeah, we have this trade in our favor. What are you going to do as a trader? Are you just going to leave it just because you are expecting gold to keep dripping onto this point? Or how are you going to manage it? Are you going to add positions? What are you going to really do at this point, right? So this is where the catch is. With me, anytime I am trading and I have like, I'm monitoring my time frames, let's say maybe the 1 hour, 2 hour, 4 hour, and then we have like a solid closure that goes in my favor, the first thing I do is now move my stop loss. So if my stop loss was set at, let's say, 1811.04, I'm going to move it from 1811.04 to somewhere a little upfront from that entry area. So it could be me putting my stop loss, because now the trade is in profit, at, let's say, 1802, which is going to be somewhere around here, right? So we can literally put a stop loss around here, 1802. It could just be a little bit in front of the entry point, right? Because we have like what, 100 pips, we are floating 100 pips in profit, even though we are expecting this to maybe make some 200 pip drip, or maybe 400 or whatever pips, right? Now the next thing that I do is that, because I had, let's say about 80 pips stops, or let's say 50 or 40, whatever pip stops that I had, it literally means that if this market had gone against me, I would have lost like that 60 pips straight away. I would have lost that money. If the market went, let's say 70, whatever stop loss it was, I would have literally like just lost that money. In the same vein, it also means that if the market goes in that same pip in my direction, then I have to like take some reasonable measures, not just putting my stop loss at break even, right? Because obviously in my trade, I'm risking like a little bit higher, maybe 3%, 4% on that single position, right? Now 3%, 4%, and I have the trade running 100 pips in profit. What do you think I have to do? After I put my stop loss at break even, I close some of my positions, right? I can close like maybe like 20% of the position, 30%, 40%, depending on how I'm trying to like manage the trade, right? It's very discretionary in this point, right? So once I close some of my positions and then my stop loss is at break even, now I'm literally like invisible in the market. Invisible here, I'm trying to say that I don't care whatever the market wants to do again, right? So yeah, I take some profit off, I leave a few positions running, stop loss at break even. Now I am properly managing my trade, right? At this point, anything the market does, I don't really care, right? I'm not directly attached to it. Now, why do I even take some of the profit off? I take some of the profit off because I don't want to leave money on the table, right? That is very important. If you've ever heard that term, do not leave money on the table, this is what we mean, right? So what do we mean? Some traders, a trade can go in their favor massively. Look, people are literally even in the market looking for 5 pip, 10 pips. They are not able to make a 5 pip or 10 pip trade. 20 pip trade, they are excited. I see all these regular random Telegram pages that share trades. The moment the trader hits 5 pip or 10 pip, it's like fire, we just hit 5 pip, we just hit 10 pip, take profit, guys. And then you are here, you literally made 100 pips, and then you don't want to take like anything out of it. That is unreasonable. If the market goes against you, right, you're literally going to leave money on the table. So when the market goes in my favor massively like that, I do not take chances in taking some profit off, so that if it reverses against me, I do not feel pained that I've left money on the table, right? Now look at what gold did. This is the interesting thing. Look at what gold did here. Within the next hour candle, this whole move just reversed back, right? Look at it. Look at how insane it is. Within the next hour move, this whole 100 pip move was totally reversed. Totally reversed. So imagine that you didn't take some profit off and put your stop loss at break even, right? You would literally be the most stupid trader on earth at that moment, looking at the screens and watching something that was incredibly blue now turning incredibly red, right? So you don't want to be that kind of trader. This is my simple tip and tricks in how I manage a trade as well, right? Just one of them, right? So now look at how the rest of the whole position ended, right? We had gold just consolidating, pushing up, right? So if you had not even put stop loss at break even and maybe the position reversed against you, and then you're saying, oh, this trade is possibly going to come back, let me just have some hope. You saw money. You didn't only leave money on the table, you also took a full loss on this position, right? You also took a full loss on this position as gold hit your stop loss at this point, right? And you don't want to be that kind of a trader, right? The same thing kind of happened with USD Swiss franc as well, right? The same thing kind of happened with the USD Swiss franc position as well, right? So I had my first take profit just here, right, with this USD Swiss franc, and then that trade was also looking like this, right? That trade setup was also looking like this, right? So yeah, we took the trade, it went a little bit in drawdown, quickly came back into our position, and then shifted up into our direction, right, putting us into about 25 pips. Because I knew that my take profit was about, let's say, 50 pips, right? Initially I was expecting my take profit to be at this point. I intended that I'm going to take my first profit where we make half of that, which is like 25 pips. So well, once we hit that half of that, which is 25 pips, I took some profit off and left the position, the rest of the position to run, right? Just trying to see how far the market can go. Again, remember what I said with trade management. I put my stop loss at break even, and then I can now like feel invincible in the market. I am not literally attached to anything the market wants to do from now on, right? I am not literally attached to it. When I say literally attached, I mean emotionally attached to that thing. I can literally like sleep, I can go out, I can play game, I can watch YouTube, anything I want to do, just because I know that I have put the market into its right positioning in terms of trade management. Right now, look at what this one also did. Reversed, quickly reversed, and then took my stop loss at break even out. Took my stop loss at break even out. So if I had not taken some profit, again, just like the gold scenario, I left money on the table. That is why trade management is very important. In another video, I'm going to show you guys how to like capitalize on a move that is going in your favor, right? So it's not only about just managing the trades and then putting your stop loss at break even and then taking some partial profit off. There are also trade management which has to do with you being able to fully capitalize on the move when it's going in your favor, right? Where you're not wasting pips. Remember I said in my last video that you should not always waste pips. I see some traders, a move can go about 200 pips, 300 pips. They're catching a 200, 300 pip with literally a 0.01 lot, right? You are wasting pip in the market. You know, you got to be able to learn how to capitalize on this move, and then when the market is going in your favor, make a lot of money, and then when it's going against you, you lose a little. That's how you stay in this game for long, right? That's how you stay in this game for long. So this trade literally lingered around the stops, and I didn't try getting back in until the next day, which is today, right? And then I had a different trade setup, a same thing in most of the USD pairs, right? This time, you see, I was trading DXY USD Swiss franc in a directly correlated way, but today the setups were inversely correlated in the sense that I was expecting strength in the USD, right? The XY pushing up, and then all the dollar crosses, which is the GBP USD, Euro USD, and New Zealand USD, literally dripping. And then I'm going to explain that trade setup in another video, but I believe that this short YouTube video about trade management can change some perspective in your mind about how to handle your trades, and not only just like put your stop loss and then take profit and expect the market to do the rest of the hard work, but also how to continuously monitor your moves and then put your stop loss at the right time, and then, you know, take some partial profit off, right? But in another video, like I promised you, I am going to show you guys how to capitalize fully on a move that is going continuously in your directional bias, and not just make like some small profit of it, right? Some people would also like to, you know, trail their stop losses, right? Rather than put a stop loss at entry, they're going to put it like some 5 pip ahead, 10 pip ahead, 20 pip ahead, as the market is floating and floating in their direction. That is also not a wrong way to manage your trade, right? But the drawdown about that is that you can put your trade, let's say 50 pips in profit, right? Like you trail your stop loss 50 pips in profit, and then the trade can literally come back and tap into that 50 pips and then go 100 pips more, 200 pips more. At that point, you missed out on the rest of the move. But if you put it at break even, right, and then you actually rather like take some profit off, like let's say you put a one lot, you can take like 0.05 off, 0.5 off. You have literally taken half of the position off. At that point, now if the market goes some more in your favor, you are still like, you know, intactly in the position, right? You're not out of the position. But if you put your stop loss, you're trailing the stop loss, and then the market takes you out, you are totally out of the move from your entry point, right? Remember, the essence of entry is that you jump in a trade thinking that the market should not come close to your entry after it lifts off, right? So if you're trading your stop loss and the market reverses, sometimes there may be a gap or a margin from your entry and then where you've traded, maybe some 30 pips, 40 pips, right? But it depends on how you trade though. But with respect to how I trade, catching the market at the very bottom or at the very top, it is not reasonable for me to continuously trail stops, because the market can easily drip a little bit, tap into the trail stop loss and continue, and I'll miss out of the full move, right? But I'll do more of this explanation in subsequent videos for you to have a clear understanding, right? But I believe that this simple short video about trade management can change a lot for somebody that has not been given it priorities at all. And then yeah, you had some clues from it as well, and then perhaps you also had like some nuggets into the trade setup, and then the correlation between how I trade my DXY, USD and all that, right? So yeah, without wasting my time, I'm going to see you guys in the next video. But before I see you in the next video, make sure to like this video, make sure to share it, also make sure to subscribe if you're a first time viewer. Make sure to also follow me on all social media at KOJOFOREX. And then if you haven't joined the KOJOFOREX Telegram community, which is officially the biggest trading community in the whole of West Africa, no cap about that, the whole of West Africa, click in the link in the description to join the KOJOFOREX Telegram community. We currently have over 20,300 subscribers, if I'm not wrong, right? And I've been dropping all these trades that I'm sharing with you in the community for free, for traders to make a lot of money, literally for free. I had people making $1,000, $1,500 sharing their trade result for me. I may put some of them in somewhere in the screen for you to know that we ain't playing in that group, right? So without wasting my time, like I said, I'm going to see you guys in the next video. Peace out.